Welcome back, foodies and finance fanatics, to the hottest kitchen on YouTube, where we serve up a dish of financial insight with a side of entertainment. Today, we're sinking our teeth into the meaty details of Tyson Foods. First up, let's talk about the PE ratio. Tyson's PER TTM is like a roller coaster ride, hitting 31.97, but hang on, the average over the last 5 years has been a tasty 11.05. And looking ahead, we've got a PER FWD of 16.06, suggesting things might be simmering down. Both indicate an overvaluation in comparison to its 5-year average. But hold on to your hats, folks. It's not just about the PER. Check out that price-to-earnings to growth ratio at 0.59, indicating Tyson might be a bargain buy for growth-hungry investors. Remember that a value below 1 is when a stock can be considered undervalued, but if its growth expectation decreases, this ratio is not telling us the truth. Now, let's peek behind the scenes with insider ownership standing at a mouth-watering 20.14%. Seems like the big cheeses at Tyson have skin in the game. But wait, there's more. Get ready for a taste of Tyson's profitability. With a return of equity at 4.54%, return of assets at 2.33%, and return of invested capital at 2.3%, Tyson's cooking up some decent returns, but it's not quite Michelin-starred yet. Now let's talk about earning per share or EPS, the bread and butter of any good investment. At $1.83, Tyson's serving up a decent portion, but keep an eye on the EPS next 5 years with a mouth-watering growth projection of 53.8%. Hold on to your hats, folks, because Tyson's earnings per share ride has been a wild one. From a high-flying start to a recent nosedive, resulting in a compound annual growth rate of -5.13%. It's been a bumpy ride, but is there smooth sailing ahead? Next up, let's follow the money with Tyson's free cash flow per share. It's been a mixed bag, with inconsistency until 2021, then a sudden drop. But hey, at least we're still floating with a compound annual growth rate of 0.84% over the last decade. Dividends, anyone? Tyson's dishing out a tasty 3.37% yield, with a whopping 22.74% growth over the last decade. Looks like they're spreading the wealth. But wait, because if we look at its free cash flow payout ratio, we can see a huge warning. At 96.26%, it is clear that no spectacular dividend growth in the coming years. And here comes the biggest problem for this company. With an operating margin of 1.62% and a profit margin of 1.02%, it is clear that Tyson Foods has not been able to transfer the price increase to its products. But hold on to your nuggets, because Tyson's revenue and earnings evolution have been a bit of a seesaw. While revenue has been on the up and up, earnings have been playing hard to get. What does this mean for the market price? Well, it's lagging behind VOO due to sluggish earnings growth. Debt's on the menu too, with a debt-to-equity ratio of 0.53. It's not too heavy, but keep an eye on that long-term debt-to-equity ratio at 0.46. Tyson's keeping its debt in check. Now, let's talk about market performance. Tyson's been on a tear with an average price return of 15.32% over the last 52 weeks. But is the market cap of $22.10 billion reflecting its true value? And what do the analysts have to say about all this? Well, on average, they predict a slight upside in the next 12 months, with a target price of $63.17. But hold your horses, because our personal fair value estimate rings in at $60.60, aligning closely with the analyst's forecast and the current price. So there you have it, folks. Tyson Foods, it's not just about the chicken, it's about the numbers too. Stay tuned for more financial feasts right here on our channel. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!